Now, some of these policies actually have a long-term care rider on it, which is kind of nice because if we couple it together with like the Class Act, it just got pulled. More and more people are going to become responsible for their own long-term care benefits.
Right.
So,
And that makes a lot of sense too, because a long-term care policy, unfortunately, when you're healthy enough to qualify for it, you don't need it, and then the longer you wait to make it, it gets more, it's cheap now at 40 years old, but you're probably not going to need it for at least 20 years or 15 years. So it's one of those things that's kind of tough to justify the expense there. And then when you get closer to that time, it's too late. I have a client I just talked to who, didn't buy it, 3 years ago, and now she has dementia, and she's 70 now or so. So she's, but now she doesn't qualify. Now she needs it and can't have it. When she could get it, it was too expensive for her.
It's kind of like some people that get in a car accident and then go out and try to buy insurance. It's a little bit harder to do so.
Yes.
Yeah. So, one thing I like about the long-term care riders built into the life insurance is some people are living healthier today.
Right.
And so it's a necessary evil to insure yourself from a financial loss, because some of these long-term care facilities could cost $5,000 to $10,000 a month or more.
Right.
And who could afford that without liquidating all their assets, and they're still going to run out of money.
Right.
But in order to afford for a long-term care, you could be talking about anywhere from $2,500 to $5,000 or more per year, depending on the situation. But now you could actually add, for a little bit more money on your life insurance, you could add this benefit in there. And if you don't ever use it, it still gets passed on to your beneficiaries.
Right.
And long-term care policies do have a beneficiary rider to it, but you're going to pay extra money for it.
Right.
And still, it's a necessary evil. But at least if we could get the most bang for our buck, because you get living benefits, long-term care benefits, and then of course cash value buildup into accumulation inside of an account at a higher interest rate that you're getting at the bank. Why not put your dollars to harder work?
Right.
So
makes a lot of sense.
It definitely.
Yeah, you're gonna buy the life insurance policy anyway, or you should buy the life insurance policy anyway. May as well make it, we can get more out of it.
Right, definitely.
And the advantage of, like you said, the long-term care rider type benefit, it doesn't cost as much as a long-term care policy. It doesn't pay as much as a long-term care policy either, but it's kind of getting two policies for the price of one.